We are going to have the debate again about the digital euro. And I'd like to ask Martijn to come back again. We didn't have any questions for Martijn, but during this debate, Martijn will participate, and you can also ask him a question about his speech earlier. And then I'd like to welcome the three guests that we have, two Europarliamentarians and one parliamentarian from the Dutch Parliament, Tweede Kamer, Mahir Alkaya. And we have Paul Tang, Europarliamentarian, and Michiel Hogeveen, Europarliamentarian. And I need your participation, because we have formulated some statements, and I need some assistance with the imagery here. We'd like you to use your phone and go to a website. There's a QR code, or you can... is it there? Oh, then I'm just going to explain it. So there's going to be a QR code, if somebody can solve that. And we're going to have three statements, and I'd like to have your opinion, whether you agree with this or whether you don't agree. And then we're going to have a poll, and then we're going to have the debate about these statements. Well, is somebody working on this? Otherwise, we're just going to start. We're going to start with the first question. So we've been talking about the financial system and about banks a lot. So the first statement that we want to put on the screen, but I'm just going to say it myself, that our society is too reliant on commercial banks for paying, saving, and transactions. And I'd like one of you, because we already heard Martijn, maybe we can start with you, Mahir. You are a parliamentarian for the Socialistische Partij, the SP. You're going to leave the parliament in a few months, but you've been very active on this topic. So can you please say in short what you think of this statement?
Well, I agree with this statement. I think we're way too reliant on private banks and companies for the function of our financing system. And the practice has shown why that is the case. We have seen the financial crisis in 2008, but way more recently in Switzerland and in the United States, we've seen that even small banks, we cannot afford to make them go bankrupt, even though those are private companies and they should be able to go bankrupt. We couldn't afford that as a society. Now, we've talked about, in your previous conversation with the two gentlemen, we've talked about the importance of trust and confidence in the system to be able to have a functioning financial system. Now, how do you organize trust in a system that is run by private companies? Is that you take away some of those risks as a society, and that's not free. Yeah? We have the depositogarantiestelsel, so the government guarantees some of the savings of society. The government has shown in the past that it will save private banks if they are in the risk of going bankrupt. So as a society, we're paying a high price to maintain the trust in the financial system, and that's all because of this statement that we are too reliant on these private banks for the functioning of our economy, unfortunately.
Thank you. Michiel, you are in the Europarliament for JA21, and you're going to negotiate also together with Paul, who's in the Parliament for the PvdA, or against each other, I hope so, for the debate. What is your opinion? Are we too reliant on banks for paying and saving?
Well, this is not a very politically correct or political answer, but I would say yes and no, if you put the statement like you have stated it. But first of all, I would like to say it's glad to be back here. I graduated here, I think, 12 years ago. So I walked back in the university hall, and I was washed over by some nostalgic feelings. And my management accounting exam, which I had to redo 4 times. So I was a bit, I started sweating a bit, but no, it's good to be back here. No, to put the statement like this, payments, savings, and what was it, lending? I think for payments and for savings, I think we're already finding solutions in order to become less reliant on banks. I am the rapporteur in the European Parliament for the instant payments regulation, where we are already looking for ways to embolden innovation when it comes to payments. So it doesn't really necessarily have to rely on banks or American card systems. But for example, for lending, I think I totally agree. I think in the Eurozone or in the EU, 75% of credit to companies, we are still reliant on banks, which is far different in the United States, for example. And that's why the European Union is now working on what is called the Capital Markets Union, which would make our economy less reliant on banking, on lending from banks, and create more opportunities for venture capital or private investors in order to create loans for companies that would need one with a bit more risk or with a bold idea. So I think that's really a way that we can become less reliant on banks. So we are becoming less reliant.
So we are too reliant then in that sense.
I think until now, yes. I think banks have become well. Banking was pretty boring some half a century ago, and it became a bit too chaotic and too adventurous. So I think if we would also increase capital buffers for banks, for example, they would become a bit more conservative, and I think that would be a very good development.
Okay. Paul, would you like to add something on the reliance on banks and why it would be problematic?
I just think, I'm not sure, is the social status of bankers higher or lower of politicians? I think we're pretty low on both end, right? But yeah, okay. Yeah. No, but apart from politicians, I think there are deep problems with the banking system. Mahir also referred to it. It's unstable. We can see it with the Silicon Valley Bank recently, but I sort of witnessed the cases of iSafe and the DSB during the financial crisis in 2008, 2009, where people completely in panic emailed to the Tweede Kamer and also to me, please save my money. And that is the inherent instability of the banking system, where deposits can flee, can cause a bank run, whereas the liabilities are long run. That's inherently unstable. Besides, banks are not only unstable, they are also destabilizing, right? So they fuel speculation. One good case is, I always think, the Dutch housing markets, value of houses rises, collateral for the bank becomes more favorable, bankers start to give more mortgages and then fueling housing prices. We have seen that again and again, and therefore you see also in the Dutch housing markets a boom-bust cycle. And apart from that, they don't serve people, they just serve their profits. I thought Theo gave an example for the African banks that just serve the 20% of the clients. They don't feel the need to serve everyone, or giving a mortgage in a foreign currency. I think it's absolutely immoral, and still we have seen that happen. And this is what banks are now. We all know that, so we try to control this problem as much as possible, right? This is why there's the most supervised sector in the economy, but the problems are there.
Thank you. Martijn, you already gave your inaugural speech. But can you react to this and also define a little bit because the speech was quite long, so can you formulate it shortly, what the core problem is, according to you, with this reliance on banking?
I think two things were already mentioned. So indeed, those recurrent financial crises, that's on the one hand the problem. And on the other hand, I think it's really problematic that banks do not function according to market principles. And what I just explained, what I also explained in my thesis, so what I see is that on the one hand, we have really a lot of protection mechanisms for banks. And I counted them and I come to 15. And on the other hand, we have indeed a lot of supervision and regulations, but that also means that really conflicts with market principles, where banks themselves assess risk and take responsibility. So more and more you see that governance and central banks decide what bankers should do. And in case of a crisis, there's also always immediately discussion, should we blame the regulators or did bankers make mistakes? And I think so this entanglement of this public and private affairs, that's really problematic from a view of a market economy.
I would like you to react also a little bit to each other, especially if you don't agree with a statement or want to add something.
Yeah, well, I think one of the most important questions after this analysis is who can solve this, right? Who do we trust that can solve this? And if you look at the right-wing parties, liberal parties, then they say, yeah, well, we need innovation, more private sector innovation. And of course, I applaud that. I applaud all these fintech companies and the cryptocurrencies who try to kick against the private banks who are really large right now and who have been too large and too powerful for the last decades. But I'm not sure if they are going to be able to replace them altogether. I think that's where the government comes in, because our economy and our society doesn't function without this trust in the financial system, right? We need to be able to trust the financial system, to be able to trade with each other, to be able to have transactions, to be able to save money. And if that doesn't function, then society doesn't function. I think that's a really good argument to step in as a government. So not only look at the private sector and those fintech companies, who I support and hope they will be successful, but we can just be fueling the next too big to fail companies. And I would like to prevent that. I would like a government that steps up this game and takes this responsibility.
And isn't the government doing that already by putting in these regulations and supervising banks? Isn't that already the kind of solution there?
I think that's already happening a lot. If you compare it to, for example, 15 years ago, when everything more or less exploded. I think that gradually we are looking at what should be a bank. And according to my book, you should have your money in the bank and you should be sure it's safe. We already have, it was briefly mentioned, the deposit guarantee scheme. So in that sense, it's already safe. But as we saw with, in the United States, with these smaller banks, bank runs are still possible. Only this has to happen. We saw it in Switzerland with Credit Suisse. So what I really think is that, and the Dutch CPB, so the Central CBS, sorry, Central Bureau for Statistics, they already mentioned that banking buffers are too low in order for banks to be safe. So we need to increase banking buffers. What happens if you increase banking buffers? Banks would be less inclined to invest in these cowboy products. They would become more conservative. And then, as I mentioned, adding the capital markets union, we can still bolster our economy. If you truly replace the commercial banks, I'm afraid that we are moving into a more of a degrowth economy. So I wouldn't go that direction.
So if you have these buffers, so Michiel is saying we have these buffers, that we just need to increase them more, but you don't agree with that. Why?
Well, it is possible to do it that way, but then you end up with 50 regulations, and none of those are free. They either result in bureaucracy, or in taxpayer money that has to be put in some kind of fund to be able to guarantee risks when they occur, or just as bluntly as the depositogarantiestelsel. So the government guaranteeing your money if in the case of a private bank that goes bankrupt. So none of those regulations are free, and if you make them even stricter, you kind of get a sector, a banking sector, where market mechanisms don't work and where people are getting filthy rich. They have the bonuses, they have the dividends, they have all the profits, all the things that other private companies have, but they do not suffer the consequences if they fuck up. And I think that's an inherently bad system which we need to avoid. But it is possible. We have seen that. It is possible to, I think, maybe prolong the life of banks, maybe indefinitely, and until they have become zombies.
So I hear you're from the Socialist Party and you're pleading for more liberalism and free market, and you are from the liberal side, and you're saying we need stricter regulations. I'm getting really confused here.
You wanted me to respond, so I got confused here, guys. Just one thing to point out, when you say government, it's Europe, right, that stepped in. Let's be clear on this. When I was in 2008 in the National Parliament, There was nothing there that could help us and save us, except some ad hoc European initiatives. And in fact, Europe built a system that makes it at least more stable for now. Though I explained it before, it's inherently unstable and destabilizing. That's why we need high buffers in the first place. Having said that, so I think the European supervision is a huge improvement what we had in the system in 2008. We also see the downside of it. First of all, regulation in Europe doesn't mean that US is regulated as well, or the Switzerland, because we had a problem with Credit Suisse and the Silicon Valley Bank, so there the problem starts and they may come to Europe. And second, of course, once you have regulation, you have a non-regulated part. So every time, also this week, Klaas Knot, as chair of the Financial Stability Board, warning for the shadow banks. And that's a deep cause of concern, because once you start to regulate a part, you have a less regulated part, and you see the shift towards that unregulated part. And actually, this is where the big rent-seeking, what it is, the high fees, the complicated fee structures really happen. This is where the big money is made. It's also in the unregulated part.
So if we look for, because we're going to have a debate also about the digital euro, which is, you said in your statement, Martijn, that this could be a solution in your view. Can you summarize that, why you think it's a welcome addition to the system? By the way, we still don't have the,
yeah, there it is.
Then we're going to do that first. So I want to know what you, the audience, think. So if you can scan this or put the code in your phone, and we're going to see what you are all thinking. Okay. A lot of agrees, only 3. One disagree. That's. I know we need a few more participants. 15. 20 against 2. Okay. Okay. Yeah. Who disagrees?
Where are they?
Where is it? That's fun.
Yeah, let's have the audience participate. So, who's saying we don't have a problem right now? Who's saying apart from Michiel, did you say no?
I said disagree.
I disagree. Okay. Just to be, that's good. Contrary. So who's the other one? And who was? Okay, it's an anonymous voter. Okay, then we're going to continue the discussion, and we're going to. So most people think we have a problem. We're too reliant. So how can we reduce this reliance in a good manner? So then I'd like to put on the next statement, and I'd like you all to vote on this before we have the discussion between the people here on the stage. So is a digital form of public money would be a welcome addition to physical cash and bank money. So we have right now bank money, the deposits on your bank account, digital money that we use. We have the physical cash, the notes in your pocket, which are public money because they're created by the central bank, by the government. And now we need something, a digital form of public money. Okay. Most people agree. Okay. Could be. Okay. Martijn, you also think this could be a good addition? Can you summarize that again from what you...
Yeah, maybe 2 things. So first, maybe the really practical side. So I really see the potential to develop the best form of money ever. So you can combine the very positive features of cash and a very positive feature of bank money in this new form of money. That can people use, so that's more a practical thing. And from a systemic perspective, that was more my reasoning that I just made. So in a capitalist or in a market economy, it's really fundamental that you can exit, that you have different options. So when you have those options and you can move your money from cash to public money or from bank money to public money, that has an influence on bank money. So that has a disciplining effect on how those players behave. And that is fundamental to every market economy. So, and in the banking system, that's just not allowed. You have to stay in the banking system. You can only take it out in a physical form, and that sounds also really from the industrial age.
Yeah. Michiel, do you agree with this, that it would be a good addition to the system?
Well, if we're talking about retail CBDC, I don't really see the point of having one. I think it's a solution looking for a problem. I think we already have our cash banknotes, which work perfectly fine. Cash is on decline, especially after the COVID crisis. Then you can do two things. You can accept this decline and you can just keep this decline going, or you step in and you say, well, we still want cash as an anchor in our society. That being said, on the retail CBDC, so I don't think that's a good idea. I think it's a solution looking for a problem only to cause consumers and companies confusion. That being said, I think a wholesale CBDC would be much more interesting. I worked for a custodian bank in the past, so we had all this intra-bank clearing and settlement, which was quite redundant and was quite cumbersome. It took quite some time and effort and capital. I think with the wholesale CBDC, I think the underlying technology is quite promising.
What do you mean with the wholesale? Because retail, you mean...
So we're talking about, for example, the settlement, the clearing and settlement of intra-bank money. So not you paying at the store, but between banks on, for example, securities.
Okay, but that's a very different... Because,
yes, so when we're talking about retail CBDCs, I would say no.
But you're saying it's a solution looking for a problem, but Martijn just said we need an exit option to get your money out of the banking system, and physical cash, it's in a digital economy, it's not very useful, so we need something digital next to it. So that's a clear reason why we would need it. So,
well, but then again, why would you have it? Why would you have it? Why would you keep it? I mean, you can get your physical cash.
But this is sort of typical banker attitude, right? Sorry, you don't care about the people. The reason
I shouldn't have mentioned it.
One reason why we want to have it, and you could call this the unique selling point, it's safe, right? The whole problem with banks is they are unstable. We don't know what's going to happen with our money. We now introduce a system of payments and saving, which is safe. And this is why we need it. And yeah, you're a typical banker. You don't care about the people. You just think about making money.
Well, but you cap. But wait. It's safe, but you cap it.
Did you learn it here now, right?
You cap it at 3. I did. No, but this retail CBDC will be capped at 3,000 euros.
Well, that's the next part of the discussion. But just to visualize, like Martijn is saying, we need something like cash. Because, do you agree that physical cash is important to maintain?
Yes, I think so. Yes.
Okay. So then, if you agree on that, can you explain why in a digital form we wouldn't need it if the economy is digitalized for a large part?
Because we have a very extensive digitalized payments infrastructure already. As I mentioned, I'm a rapporteur on the instant payments regulation, which tackles all the problems that a CBDC claims to tackle. It's instant within 10 seconds. It's safe. We have the deposits guarantee scheme where your money is already safe, especially under 3,000 euros on which the CBDC is kept. So so if you ask a random person in the street, would you like a digital euro? What will they say? They will say, a digital what? They say, I already have a bank account. I can already do my payments digitally. So again, money should be an anchor for people to have trust in. And if you are only to sow confusion amongst the people, I don't think you should do it. And if you have a project, there should be real demand in society. There's demand here, but I don't really think if I would walk down Holland Spoor and I would ask a random person, this would be a very different statistic.
But if you ask people, do you want your money to be safe, they all say yes, right?
And it already is.
No, it's not. We know it's not. And that's why if you have more than 100,000, and some people in this room may have that, they don't feel safe. If you ask people, do they get enough return on their savings? What do you think they say? I don't think that people will, the return, my interest on my savings accounts is way too low. Rabo doubled their profits in last year, and the same was with ING and ABN AMRO, because the interest rate was rising. Hey, did it go to the consumers? No, it went to the banks. That's what the problem. And this is why you need also a public competitor, so people can choose. And now we have a public form of money. Please, so this will put pressure also on the banks to make private money more attractive and pay a higher interest on the saving account.
Let's ask, we're not on the streets, but let's ask somebody from the audience.
All right, I have a question for you because you say physical cash is a good alternative, but legally you're not allowed to have more than 2,000 euros of physical cash in the house. So I don't see how that is a good alternative for a bank.
I don't really get the question.
Well, you say physical cash is a good alternative for a bank, right? But legally,
No.
I'm not allowed to have more than 2,000 euros of cash in the house. So for me, physical cash is not a good alternative for a bank if I were looking for an alternative.
No, I meant it's a good alternative for society in order to have. So the question is whether we should have an addition to physical cash and commercial bank money.
So would you like an addition? Would you like something else than physical cash as an
Yes,
addition?
I'm very much in agreement with Martijn that without there being an alternative, banks have all the power, especially because they get bailed out, so they no longer function according to market principles. So yes, I completely agree with that part of the debate.
So let's zoom in a little bit on this market principle. So how could a digital euro improve the banking market? Because we, at least on one thing, we all agree that we're too reliant on banks. So, and I think you would also like competition, you encourage that, right, Michiel?
I don't really see the competition here, because you mentioned interest rates. The proposal by the European Commission explicitly states it will not have interest rates and it will not be used as a store of value.
That's the next part. We're going to discuss the proposals explicitly, but just the idea. So one of you, can you explain why this would improve market discipline or something like that?
Now, if you look at what the market principles are, I think two basic elements are that you can vote with your feet, that as a customer you can go from one company to another company. Now, if you look at how many people switch banks, that's really a low number. Because why would they? It's really a hassle. You can't take your number with you, your banking number, and if you do so, you end up with a bank which is almost the same as the bank that you were already in. So why would you do that? So people don't vote in practice with their feet. Now, if you introduce a real different alternative, like a government bank, which has no risk, you also get not that much return. So it's not a commercial bank that it invests your money in stocks or whatever. Then you have a real different alternative, and people can choose between really alternatives. Now, that's one thing. And the other thing is, if you really don't do a good job as a private company, then you can go bankrupt. Now, private banks also can't go bankrupt. We've seen that in practice. They know that they can't go bankrupt, so they know they can take more risk than they would be able to do if they knew that they could go bankrupt at the end. So those two things you can solve, but then you have to not only introduce a public alternative, that's one thing. While you introduce a public alternative to the people, then you also have to get rid of some of those 50 regulations and get rid of the bureaucracy and get rid of some of the things that are meant to make the financial system more secure and to gain trust of the people. But in practice, they only are protecting the bankers right now. And they have a real bad influence on the system as a whole. So I as a socialist, am not I wouldn't leave the regulation system as it is right now. If you take the responsibility as a government and introduce a real different alternative, then on the other side, I would say, leave the market to be a market. Let people switch banks more easily, and also, if they don't do a good job, let them go bankrupt. Not like it is right now. And the only way you can do that is if you have the basics under control as a government. If you have introduced already some kind of service to ensure that people can make transactions and save their money. Now it's not there, so you end up with 50 regulations.
Okay, so we can reduce the regulation if we have something public in a digital form. Yeah. So I would like to hear the opinion of the banker also in our midst, Menno. But think about that, because I would like to know if you also think that it would create more competition if we have this digital form. I saw someone else with a question there.
Yeah, can I hold it myself, or are you holding it? Thank you. Yeah, I was a little bit triggered. Michiel, is it Michiel? Okay. By your comment, if we went outside here today and we asked people, are you interested in a digital euro? That most people would say no. And in fact, up until a couple months ago, when I attended a seminar on it, I would have said no as well. And now I'm off to teach people about digital euros and so on. And I'm wondering, we have 3 parliamentarians here who are representing the people, right? You have been elected by people. What do you see your role being in helping people understand these choices that they are making, that you are making in their place? So what I understand from the Waterworks is that part of it is to democratize some knowledge about the financial system. That's sort of a big part of it, is help boost financial literacy in the people. So I am fully in agreement that if you went out there and said, hey...
What's the question? Because
the question, sorry, yes, sorry, I am so sorry. The question is, how do you see your role in making sure that the people that vote for you also understand these kinds of topics?
Sorry, but I'm a politician. I held myself publicly accountable. This is why I come to public meetings like this or whatever. But asking us to change the level of financial literacy in the Netherlands, hey, don't do that. 80% is completely financial illiterate. They don't understand compounded interest. Right? So be more specific on what you ask. What people need to have is that there has been, and I hope you can see this also, that there has been a fair, honest debate on the introduction of the digital euro. That every considerations are taken into account. And I just gave my here also a compliment. I think that the debate in the Tweede Kamer was, for the first time, I experienced that in my almost 10 years at European Parliament, was ahead of that one in Brussels. And it had impact not just in the Netherlands, not sure it's the right impact, it was a different discussion than we had here right now, but it had impact in the Netherlands, but also in Brussels. So, and this is what the concerns of privacy, or is it a public competitor to private banks, all that, and that should be part of the discussion. But don't ask people to, let's say, I don't think this is why I'm a politician, say, I do an opinion poll, see if people like it or not. I don't go out, in the end, I like the views on the street, but I don't determine my view on what people I meet. I make up my own mind, please. Because there's one thing that we really should address before we go to the next part, because it's not about cash. It's all about...
Address it.
It's all about Libra, of course. This is what it kickstarted,
That's what
right?
what
and this has not been in the discussion. One reason why I'm in favor of it, and the one reason why the central bankers got spooked, really spooked, was the idea of Libra. That got this whole thing kickstarted. Because imagine, make it simple, you don't know what Libra is, but you know what a dollar is. Suppose we all paid with dollars in the Eurozone. What would the Eurozone be like? What would be the role of the ECB? How could we have monetary stability? How could we ensure financial stability? This is what really spooked the central bankers. And then they overcame their concern, because the digital euro is, of course, a public competitor for private banks. They overcame that concern, and this is what it got kickstarted. So this is what you need to take into account. You need to think about the entire systems. Now, I don't expect my mother to understand the financial monetary system, but I hope that she has the trust that there's been a fair, honest debate on that.
Okay, thanks, Paul. You answered the question for Michiel, but now I want to move to Menno and also incorporate this. So the competition part, will it enhance competition? And whose competition do you fear? Something from the European Central Bank, or would it be Libra who would compete with the banking sector? I think it's a nice addition. Can it enhance competition to have something next to bank money? And it could be Libra, or it could be a central bank coin.
Yeah, so if you introduce the digital euro, that would be a form of competition, public money competing with private money.
Yeah.
Clear. And if you then said, oh, I'm going to remove all the regulation from the banking system, then banks really aren't as we know, aren't really banks anymore. They're just like shadow banks. They do a number of transformations. And there's this assumption here that that will solve the problem of financial instability, and I can guarantee you it will not, because that's what history tells us. You go to the 1930s, we essentially had this system. We had a system where you had public money, cash, which was the standard at the time. It was at that time, the technological best thing you could do for payments. What happened was there was free competition in the banking system, light regulation. We had a financial crisis. Look at what happened in the US in the great financial crisis a few years ago. We had a whole shadow banking system. That's where the financial crisis started. It wasn't in the banks that were regulated, it was in the non-banks. They had a whole thing and they did the same thing that banks do. They transformed, they took something, promised you liquidity, transformed it to a long maturity, and then lent it out. And that transformation is inherently risky. But there's a market for that. And this is what we see consistently in history. You can call it banks, you can call it something else, it doesn't really matter. There's always going to be someone who wants to get something that's liquid, which means you can get your money at any time you want, and they want to have a return on that. Yeah. And so that's going to exist regardless of what you do, and that is going to be inherently unstable. And so the thing is that you're not going to solve that with a digital euro.
Something next to...
You're just...
So it's... Wait.
No, I'm not saying...
Wait.
Okay, but then
wait a second.
This is a good question.
I want to summarize it because so everybody can understand it. So you're saying people want something which they can use anytime. It must be safe, but they also want interest on it. And then banks or non-banks, they provide the service. They take that, they promise that, and in the meanwhile they invest in something which creates a return. And this thing that they promise, that you cannot have that at the same time. So the question here from Carlijn is, can you prohibit this whole transformation?
Yeah, and then what do you get? You could prohibit the transformation, but then you get less lending. So then good ideas that need financing won't get funded, at least not through this mechanism. So there's just an inherent trade-off in doing it this way. It has benefits for financing activity in the economy, but it's inherently unstable. And you're not going to solve that with the digital euro. There's maybe other ways to solve it, and the solution we've come up with now is to heavily regulate. You have kind of essentially two forms of institutions. You have the ones that are heavily regulated, and there's a partial government guarantee there, and you have another free system next to it. And we act here like banks have enormous privileges, but they're heavily regulated. So there's a lot of things, a lot of lending that doesn't happen in the banking system because of these regulations. And other parts of the system take that on. So again, and I'm all for regulation. I'm all for thinking about what the better system would be. And I'm actually all for a digital euro. I think it would be a good addition to the system, but you can't expect it to solve everything for you. You'll be disappointed.
Okay, Martijn, react to that. Yeah, I'm going to go to the next.
Then I now become really, again, a scientist. So in my thesis, I call this contractual liquidity. So it's based on a contract.
Don't make it too technical,
No, don't make it too technical. And I do agree, so I've seen different forms, so also stable coins and money market funds, they use those same construct. In a way, that's also one of the conclusions of my thesis, that you indeed should regulate those kinds of constructs. So you should look at the contracts underlying it, and not at the institution. So you can call it a bank, but it's also in other places in the financial markets. So I think that's a very valid point, Menno, that you have to look through this view from what kind of contracts do they offer. And if you don't want to have these contracts, and that you should discuss this trade-off indeed. That's a very good point. That's my comment.
Let's move on to the last statement, and which is really zooming in on the current proposal of the European Commission. It came out 2 months ago, and it says we're going to have a digital euro, but it's going to be restricted. You can have only 3,000 euros on your bank account. And also an important thing that the European Commission wrote is that it is not supposed to be something you save in. So you just need to use it for payments, but you're not going to have it as a store of value. It's explicitly in the statement. So compared to the kind of idea that we've been discussing before, there's quite some limits to this form of the coin. Do you think that's a good idea, or is it a bad idea? And who wants to go?
This is a very bad idea, very bad idea.
Okay.
Because the whole point was, this is what I tried to discuss, why you want to have it. You want to have a safe currency, right? That's why you want to have it. What do you do with 3,000 euro? Or sorry, not that much. So it won't serve as a means of payment or a means of storage, and that means, and this is my fear. So I see potential for the digital euro. I agree with Menno. It's a start. That's how I see it. It's not an answer yet, in the sense, but it could have revolutionary consequences over time, where really the business models of bank will change. That's how I like to see it, at least. It won't start there, but if you start, my concern is, if you really have this start with these holding limits that hold back the digital euro, it will be a failure. It will be this is not, the ECB will try to innovate and it failed, and then we don't have this option on the table. Whereas I truly believe this public money can be of value added, not just now, but also it will grow over time.
Michiel, do you think it's a good idea that it's limited, the use of the digital euro?
Well, I think that whether either you're a company or a government institution, you introduce something new, you look whether there is market demand. I learned that here, by the way. But I don't really think that they have looked into the market to see whether there was actual demand for this. They just had this idea, and now they're pushing it out. And what we're seeing is that, indeed, in theory, a digital euro could have the advantages that Paul Tang just mentioned, but well, then they came into this negotiating phase where they put on the stakeholders with the banks and some payment systems, and they came up with this half-baked product. And I fully agree that the potential advantages, which I tend to disagree with, but I agree with your analysis, is now even more redundant because you make it capped, you make it a payment system that has no intrinsic actual advantages over existing products. And there's still a lot unclear for the industry. It's going to be legal tender, which means it has to be accepted for merchants. The costs are still unknown. The costs for the merchants, the costs for the banks. How will the cap, the 3,000 euro cap, will be determined by the European Central Bank, but how can they can they change this cap? How will it be determined? For how long? There's still a lot unclear.
Mahir, you were involved in the discussions, and you also wrote a book about it, Van wie wordt ons geld? I highly recommend to read it. You got a bit disillusioned about the political process also. You're saying, like, I was involved, but I wasn't really involved.
Yes, that says a bit about the involvement of national parliaments in this kind of big issues, developments that have a big impact on whole of Europe, but the most of the democratic process is either in Brussels or, even worse, in Frankfurt at the European Central Bank. Now, if you would have a good political debate about this from the start, then I think you would focus on what issues are you trying to solve on a systemic level, and how can we assure that people are going to use this as much as possible so that the goal that we have set is being reached. Now, because we don't agree about the goal, there hasn't been a real political debate about what issues that we're trying to solve, we end up with a system, and I'm afraid that Michiel is going to be right. Now, I want to give an example where my origins lie in Turkey, where they introduced a system where you separate garbage, and people saw that they threw away their garbage separately, but when they came to pick it up, they all threw it in the same thing. So people just started not trusting that system, and after a few weeks, they fixed it. They started picking it up separately, but people, once they started not trusting the system, you couldn't get them to change their behavior anymore. So you have to do it good in the first place. Now, if you have the digital euro and people are going to see what's the benefit for me, they're going to have this debate about should I use it, should I not use it, is it safe, is it not safe, then you have already lost it. So I think the political debate that has been not good from the start has had a negative impact on what the outcome now is. Because now everybody is saying that is involved in this project that we do not want to, how do you say that? We do not want to destabilize the current financial system. We do not want to destabilize the banks. Whereas I would say that's exactly the goal. We do want to destabilize the bank, not right away. We do want this in an orderly fashion, but we want to get rid of those banks who are way too powerful without destabilizing the rest of society, destabilizing the economy. But we do want to get rid of those banks. And if you do not agree about that goal, then I think what you end up with as a design is going to be what it is right now, a failure.
Okay.
So Paul, add something, and I would like one more question from the audience then, and then we're going to finalize the discussion because I think we're already over time.
Because I think this is important. We can have a discussion on the use case of the digital euro.
Yeah.
Doesn't mean that you can't say it's not democratic. It is, right? You're from the Socialist Party. You don't believe in European democracy. I do. And this is a democratic process. And the European Parliament is the parliament, more than the Dutch Parliament, to decide upon. There are no blockades, no vetoes in this decision in Europe, and that makes the Europe the better, right? So, but don't say it's not democratic if you don't like the outcome. That's not fair. That's not fair, of course.
Yeah, react to it. Of course, with this kind of remark, you can react to it.
Theoretically, you're right, but how many people have voted on the European Parliament?
Do you remember how the Socialist Party campaigned last time?
But do you want to have a debate on the content or on these kind of things?
No, look, this is the way. Was the content by the Socialist Party.
But where is so the decisions are taken in the European Parliament? But do you feel you have influence on the design? That you've been on the.
Of course, we are lawmakers. It's going to be an interesting debate, and I'm not sure. I know the position of Michiel. But I'm not sure how the other political groups will enter this debate. We had a first discussion in the European Parliament. Like I said, the Tweede Kamer was ahead of the European Parliament. Happened only once, was a good thing. But the debate still has to develop in the European Parliament. But one of the central questions is, what is the user case for the digital euro? Why do we bloody need this thing?
But can I ask one simple question, just theoretically? Imagine that 100% of the Netherlands was against the digital euro. Could you stop it?
If suppose that 100% of the Luxembourg was against instruments against tax avoidance, should that stop us? But suppose that Malta has to decide, could stop on abortion. Should that stop the rest of Europe? You have to live in a European community. You don't accept that. That's fine, but just be fair on that. Don't say it's not democratic. You have a very different view on Europe. I believe in a democratic Europe. I think we are in this together. The euro brought us here. How can we decide and then have on the euro and then have a veto for the Netherlands? How do you imagine that? You're in a way, you're in 1999 where we didn't have the euro, but we have the euro since 2000, so accept it.
This is almost like you're talking about a religion. This is not healthy anymore.
Okay. I have one more question now.
I don't think this is fair. This is democratic decision if you don't like the outcome. I don't like the outcome, but if I lose a democratic fight, hey, at least I fought it and I have to accept it. I accept democratic decision.
What is the way ahead now? Because you say there is already a proposal, but you're still going to have the first debate. So it's the proposal is there, but you didn't discuss it before. That's something I do not understand. Even if we keep it in Europe, then I would expect, first we have the debate with the parliamentarians, and then you develop the plan and have another discussion.
Just to clarify, we did have a debate in the European Parliament on this. So the European Central Bank started experimenting, then the European Commission drafted this proposal, and during their drafting process, we had a debate in the European Parliament on this. Now it's coming to the European Parliament and the European Council, so the member states, and we have to discuss whether we agree with the European Commission's proposal. So at that point, we are right now.
Okay.
Just to add, I think I agree with both of you. I think there is a European democratic process, but I do think there should be a referendum on this digital euro.
Let's have a last question from the audience. Who has a good question? Yes? Okay, over there.
An often heard concern about the digital euro would be about how it perhaps invades privacy. This is a big criticism of the digital euro, but to what extent is this a realistic criticism? Is this an actual problem?
I think Mahir, you want
And Mahir wants to...
This was a very big concern of me and of many people, and we have fought hard to put that on the political agenda. And if you look at the legislation right now, it looks good. At least for the short term, the legislation is. It says that if you look at the data of the personal data that the European Central Bank will get of people, in theory, that should not be able to be linked to an individual. So that data will stay at the private banks. That's another concern of me, that private banks will still be needed for the digital euro to function, but your data is already now at the private bank. In that concern, if you have privacy concern about your financial data at the commercial banks, then you are right. But it looks like, if you look at the legislation right now, that European Central Bank will not get that much info and data about you as my concern was at the beginning. So I would say that the attention that we had for this issue has paid off. They listened. Even though it was not easy. But
Mahir, thank you for the last answer, and thank you all for coming here. I thought it was a really good discussion, some disagreement, the kind of discussion you'd like. So thank you very much, warm applause.